Hi everybody, this is Delaney Wood, and I am now recording my Oregon State Board of Accountancy Ethics Guideline presentation. So let's get started. The Oregon Board of Accountancy Guidelines can be found on the Oregon Administrative Rules website. It is Chapter 801, and Division 30 is the sub-chapter that is devoted to ethics. So today we will be looking at, as you can see on the screen, 5, 10, 15, and 20, which are the subheadings devoted to ethics. Independence, integrity, and objectivity is number 1. The second is general and technical standards. The third is responsibilities to clients, and the last is other responsibilities. So let's start out with OAR 801-30-0005. The Oregon Board of Accountancy defines independence as a member in public practice who adheres to the performance of professional services as required by standards promulgated by bodies designated by the SEC, the General Accounting Office, and the Department of Labor, as well as the AICPA. So they really adhere to federal regulations. Secondly, along the lines of integrity and objectivity, a licensee shall maintain objectivity and integrity and shall be free of conflicts of interest and shall not knowingly misrepresent or subordinate the licensee's judgment to the judgment of others. So taking that next step further, looking at our textbook and connecting those, the textbook defines independence as a CPA who performs attestation services such as auditing, triggering the need for that CPA to be independent of client entities to enhance assurances. So those are pretty similar. And for integrity and objectivity, all CPAs must maintain a mental attitude of impartiality, intellectual honesty, and be free of conflicts of interest. So for the book, it appears that rules in the form of principles are the main focus here. Next, we have OAR 10, which is General and Technical Standards. This mostly entails professional competence and due care, and the Oregon Board defines professional competence as licensees who only undertake professional services that they can reasonably expect to be completed with competence, and due care as licensees who exercise professional care in the performance of professional services. So not super specific there. When we move on to the book, professional competence is very similar to the Oregon Board, defined as having the appropriate technical qualifications to perform professional services and provide improper supervision and evaluation of the quality of the work performed. Due care is much more specific here in the book rather than in the Oregon Board, defined as performing services to the best of their abilities, carrying out responsibilities with the best interest for whom the services are being carried out, carrying out services with the public interest in mind, following technical standards, and lastly, planning and supervising engagements. So much more in-depth here rather than what Oregon follows. Next, we have OAR 15, which is the responsibility to clients. This is what Oregon deems the primary responsibilities to the client, and that is confidential information. So a member in public practice shall not disclose any confidential client information without the specific written consent of the client. After that, they do list multiple permitted disclosures. So information is not allowed to be disclosed whatsoever unless there are certain circumstances in place, such as court orders, subpoenas, investigations by the standards of the profession, to insurance carriers for claims, or to the Board of Accountancy. Looking at the book here, extremely similar. Confidential information should not be disclosed without consent of the client, and the permitted disclosures are almost entirely the same. They adhere primarily to federal guidelines, the PCAOB, the AICPA, Board of Accountancies, extremely similar there. Lastly, we have OAR 20, which is other responsibilities and practices, and that is really only defined as professional misconduct. So, a CPA should not commit an act which reflects adversely on their fitness to practice public accountancy. They shall not engage in acts of gross negligence, such as failures to report material facts, failures to report known material misstatements in financial statements, and the CPA shall not act in any way that causes them to be disciplined by federal, state, or other jurisdictions. That's what Oregon says. The book, they do not specifically define misconduct. However, they do define acts discreditable, which covers multiple things that are very similar. They do mention discrimination and harassment, solicitation or disclosure of CPA examination questions or answers, the failure of a CPA or CPA firm to file and pay income taxes, and of course gross negligence and following standards as well, which are similar to the Oregon State Board of Accountancy guidelines. That is all I have on the Oregon State Board guidelines. And lastly, my plan to meet those standards were I to become a CPA. Number one, I would actively review the Oregon Board of Accountancy case law and recent case studies. Those are all available on the Oregon Administrative Rules website and under Chapter 801 as well in the OAR. Next, I would take yearly ethics programs from a registered ethics sponsor. These are required upon renewal, but I would take them every year, hopefully from my CPA or under the guidance of my CPA firm. And lastly, I would take on continuing education credits and ethics courses yearly or every renewal period to stay up to date on professional rules, regulations, anything that changes, and to, of course, maintain my ethical standards and codes. And that is all I have today, so thank you so much for listening. Bye.